Alright, so there are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? Now, to help you navigate through this maze, today I have with me Gautam Kalia, Senior Vice President and Head Super Investor at Sher Khan by BNP Paribas. Gautam, good evening and welcome to the show. And for rest of the viewers who are watching us live, what you can do is send across your question just in case you want to get your financial planning done live by Gautam today. The WhatsApp number is 865-797-4571 and the email ID that you need to note down is themoneyshow@etnow.tv. Alright Gautam, let's begin. We also have our first viewer connected, Mr. PVR Reddy. Good evening Mr. Reddy, how are you doing today? From where are you calling? Mr. Reddy, can you hear me?
Yes.
Hi sir, good evening.
Good evening, ma'am. How are you?
I'm doing good, thank you so much. You're calling from?
I'm from Hyderabad.
Hyderabad. All right. So, 16 years time frame, and you have invested in a couple of funds. I will just read out the name so that you can cross check. You have Nippon India Small Cap. You have Nippon India Multi Cap in your portfolio. You also have Franklin India Focused Equity, SBI Small Cap, SBI Large and Mid Cap. You have Parag Parikh Flexi Cap. You have Quant Mid Cap, Motilal Oswal Mid Cap also in your portfolio, and Quant Multi Asset, Mirror Asset Focused, and ABSL Flexi Cap. Is that right?
Mm-hmm. Yes, ma'am. Yeah.
Perfect. All right. So we've got your allocations right, and you are planning to stop your SIP in SBI Small Cap, and you are planning to deposit in the gold monetization scheme for 5 to 7 years as well, and you also want to figure out or dabble into PMS. Is that right?
Yes, ma'am. I just wanted to understand whether should I consider
SBI large cap and mid cap is also one question in concern where you are thinking of discontinuing your SIP. Is that right? Is there any specific reason?
Yes, ma'am. I've seen that Parag Parikh Flexi and the Nippon Multi Cap. They are enough focus on the large cap. So I thought I would discontinue this, and I thought of diverting it to these two funds.
All right. 100 CR is your goal. And what's the current value of your portfolio, if you could just share that?
As on yesterday, about 10 crores. Yeah.
Sure. All right. So let's get your portfolio sorted. And Gautam, should he be considering PMS, looking at the good returns or super good returns on a lot of PMS that we are looking at or seeing these days?
Yes, absolutely. So anyone who has a portfolio of, let's say, 4-5 crores can easily look at other investment options besides mutual funds. So the regulator allows for PMS, which is a separate category, portfolio management scheme, as well as alternative investment funds, and they've divided that into category 1, 2, and 3 funds. So there are plethora of funds available under these two vehicles as well. So essentially, there are about 5 vehicles. So definitely, there are a lot of options within the PMS and alternative investment fund category that Mr. Reddy can consider. In addition, or as a replacement to a portion of his mutual fund portfolio. If I look at his portfolio, he's putting in something to the tune of 13.25 or 13.26 lakhs a month in SIP. And right now, when we look at the portfolio, the allocation to the mid and small cap is around nearly 30%, and large mid is only about 9%. While everywhere else it's either focused or flexi cap, multi asset, which is multi cap, which is about 57%. So the allocation in the portfolio itself is a little bit skewed, and maybe that can be corrected with the increase in large cap allocation, if that is something Mr. Reddy is comfortable with. Ideally, his profile, he should be talking to an advisor or a wealth manager who can better tailor make his portfolio to his needs and provide him with access to certain options that are available only to clients with portfolios above 5 CR. But since he's asking questions on the show, I'll be very happy to tell him what to do in his mutual fund portfolio. So SBI small cap, he should shift to HSBC small cap. Nippon India multi-cap, he should reduce his SIP and shift about 66,500 to ICICI Prudential Blue Chip to add to his large cap exposure. Franklin India small cap. Franklin India focused has only about 10,000, so it's a very nominal allocation in such a large monthly allocation of 13 lakhs. Putting 10,000 here doesn't make sense. So move that money into HDFC top 100. Mere focused has 2,70,000. It's a fairly large allocation, so we would like to reduce that and suggest him to increase allocation to HDFC top 100 by 1,22,500. Aditya Birla Sun Life Flexi Cap, again, a very small allocation of 54,000, so that should be moved to ICICI Prudential Blue Chip. Parag Parikh Flexi Cap, a very large allocation of 2,34,000. So reduce that by 40,000 and move that to ICICI Prudential Blue Chip. So that's what I would suggest on the fund side. As far as his target is concerned, I didn't have his initial portfolio value, but now that I know that his current portfolio value is already 10 CR, I believe he should be able to achieve his target in the next 15, 16 years at if he gets about 12% a year.
I think he's bang on as far as his target is concerned, looking at the investment amount. But also, can you also give him a guideline as to how to select the right kind of PMS for him?
PMS again comes, it depends on your current portfolio allocation. So most PMSs that are doing extremely well are in the mid and small cap space. So when you're looking at past performance, that's what you'll see. So when it comes to PMS or alternative investment funds, because with your 10 CR portfolio, you can easily look at Cat 3 alternative investment funds as well. So if the choice is between mutual funds or a PMS and Cat 3 fund, I would say look at fund managers, look at their philosophy, look at their investment process. These are things that are most important, and look at what space in their portfolio do they fit. So if, for example, if you don't make any of the changes that I've suggested today, then you could very well go in for a large cap or a large plus mid cap kind of focus strategy, and that would be a good fit to your existing portfolio because your large cap bias is less. You've got less exposure there. So that's one strategy that you could enter. So one is obviously how does it fit in your overall portfolio. Second is if there is a particular fund manager style or process that you're particularly impressed with, that you should go for. Again, like mutual funds, you shouldn't look at purely past performance as an indicator, because obviously you need to look at risk adjusted returns as well as the ability to deliver those returns going forward. So in 2005, also there was this wave of PMS, doing extremely well, and then that kind of wave turned once the market started tapering. So that's why it's extremely important to go in with funds with robust processes, and that's what you really want to look at. What is happening in the industry now is a lot of star fund managers are moving away from mutual funds, setting up their own PMS and AIF shops. So if there is specific fund managers in mind, you could even target them.
Sure. Very well explained, Mr. Reddy. Is there anything else you want to ask Gautam?
That'll be it, ma'am. Thank you so much. I just wanted to
Sure.
put in one last word. I would just say that it shows like yours and website like Value Research Online
Yeah.
that has helped me just develop a discipline to invest something monthly, which I never had. So
Okay.
I really appreciate a show like yours. Yeah.
Thank you so much. Very encouraging. Thank you so much, Mr. Reddy. Thank you. All the best. All right, let's move on. And I have Mr. Shantanu on the phone line with me. Hi, good evening, Shantanu. How are you doing today?
Good evening, and ma'am, I would like to express my gratitude for the entire team of AT because the way they have taken up my case, I was following it up. It is very important for me. I have accumulated around 25 lakhs in
Right.
the mutual fund portfolio.
Right.
And now I'm in a dilemma. I want expert advice whether
Sure.
I should go for SWP or should I have chosen that Jivan Shanti LIC scheme, which is offering highest amount of return at present.
Okay.
Or should I go for 2 year deferment payment or should I go for SWP? I need
Sure. Sure. Okay, so the corpus is 25 lakhs, and this you have invested in what kind of mutual fund schemes? Shantanu, first of all, thank you so much for your encouraging words. And could you also give me some details about your mutual fund portfolio right now? And from when do you want to start this SWP also?
Yeah, first I have invested in only four categories of mutual funds. One is ICICI large cap, then Mira Asset, then Kotak large cap,
Mira
and Mira
Asset,
small
Mira
cap.
Asset which scheme, Shantanu?
It's on the large cap, ma'am. It's a flexi cap. Sorry, flexi cap. It's
Mira
flexi cap.
Asset Flexi Cap, and then the last two ones were?
ICICI large cap,
Huh?
then Kotak
Kotak, what
large
scheme?
cap,
Large cap, okay. Okay.
and Mira Asset small cap.
Okay.
And actually, I have invested 8 lakh thousand, which is now around 25 lakhs. So I'm a long time.
Okay, so you did a lump sum investment in these funds.
No. I am investing for last 6 years in mutual fund.
Got it.
And because
Got it.
of this COVID period, I got very good return on that.
Sure, sure. Very good. Very
So
nice
this
of
is
you to
what
hold on to your investments and keep investing also. So the SWP will be from when? You're invested since what?
59 years, from 59
More 2 years.
years.
From 2 years from now.
Yeah,
Okay.
yeah.
So the current value is 25 lakh that you have accumulated. And how much would you need every month from SWP? Is this the portfolio that you are depending for your regular expenses?
No. Actually, Actually, I created this portfolio for my wife, very frankly.
Okay.
So it's for her.
Got
So
it.
that's why I just want to have around, see, if I go for the Jivan Shakti, it is coming 1,86,000 yearly. So I just want expert advice whether should I go for SWP considering the around 12% return from my portfolio, or should I go for the debt with Jivan Shakti? So please advice I need.
Sure, sure. Gautam, what is your view? Should he be opting for LIC Jeevan Shanti?
So, answer is a little bit tough. It's not so simple. So, let me try and address this as best as I can.
Sure.
So, the good news is that he's not relying. Shantanu is not relying on this for his daily expenses. So, maybe stability of return or consistency of return is not as much of a priority. The other point is that how much risk profile is he, risk appetite does he have? How much risk is he willing to take? So Jeevan Shanti, for example, will give him a guaranteed return of anywhere between 6 to 8%, which is completely taxable in his hand. So if he has any other source of income, then this basically adds to his income and its tax. So if he's in, let's say, 20% tax bracket and he's earning this additional 2 lakhs here, so that will also be subject to tax. So the return is slightly on the lower side. Typically, these annuity plans give about 6 to 8%. So that's what I'm guessing this plan will also offer him. Now, when it comes to SWP, SWP obviously carries with it some market risk, which means that there will be volatility in the market, which will also reflect in his portfolio value. So as long as he's comfortable with that, then over a long term, he can expect about 12% return. Historically, equity has given about 15-16%. So he can expect around 12%, and he can set up a SWP worth 6-7%. There, he doesn't have to pay tax. He just has to pay long-term capital gains tax if it is structured correctly. And that also is up to the first lakh. It's free. So actually, if he does his tax harvesting right, then he may not even have to pay any tax there. So it is definitely a more lucrative way to invest. Obviously, carry some risk. So to mitigate that risk, what I would suggest is that he changes his portfolio and he builds a portfolio of these 2-3 funds that I'm suggesting. He can put in some money in Edelweiss Balanced Advantage Fund, HDFC Balanced Advantage Fund, and ICICI Prudential Balanced Advantage Fund. So he can decide what allocation he can make in any of these funds of that amount, the 25 lakhs, and then set up a SWP for about 6 to 7% of the invested value.
All right. So, Shantanu, Edelweiss Balance Advantage, HDFC BAF, and ICICI Pru Balance Advantage Fund is what Gautam is recommending. Is there anything else you want to ask him?
My gratitude for the time you have given in such an important channel. Thanks.
Thank you so much. Thank you. Let's move on. I think I have Mr. Yash Gupta from Shimla on the phone line with me. Yash, how are you doing?
I'm fine, ma'am. How are you?
I'm doing good. Thank you so much for sending us your question. You want to know the tax treatment on multi-asset allocation fund, is that right?
Yeah.
Okay, so have you invested in the in any fund?
I'm having investment in index funds mostly.
Index fund. So you want to invest in a multi-asset allocation fund? Is
Yeah. If it is tax efficient.
sure. What's the fund that you have in mind or you've researched about?
ICICI Prudential Multi-Asset.
Sure. Perfect. So Gautam, multi-asset allocation fund is also a category that's in flavor. Also because the kind of diversification it gives you, and I must say that Yash has done a good research. ICICI Pro MAF is actually a good fund also to consider. But then yeah, your take on the category, and yes, the tax treatment, considering a large part goes in equity in these funds.
So I think multi-asset is a fantastic category. It helps in automatic asset allocation, rebalancing, looks at valuations across asset classes. So it is a ready-made portfolio with no tax implication when you make changes, no costs that you make changes between one asset to another because it's built into the fund. So really like that category, and I believe it's what you say the black sheep of the mutual fund family because it's really undersold and underappreciated. But I find that category extremely compelling and recommend it strongly to clients. Uh, on regarding taxation, when you're looking at these funds, just make sure that they have equity taxation, and that you can determine if the strategy is to have more than 65% allocation to domestic equity. So as long as the fund has 65% or above allocation to domestic equity, then you come under equity taxation. Otherwise, you run the risk of the pure income tax or the debt taxation of 20% with indexation. So there are some funds that don't cover 65, so you just have to look at that to make sure that you get equity taxation.
All right, Yash, hope that answers your question. Is there anything else you want to ask Gautam?
Oh, thank you.
All the best. All right, time to take a short break, but then post that we have our viewers connected on the phone line. But before I take a break, I'm going to flash our WhatsApp number and email ID, where in case you're watching the show live, do send across your questions and have it answered by Gautam today live. Welcome back. You're watching the Money Show, and I have with me Gautam Kalia, who's answering your portfolio queries live. And Gautam, let's move on and let's take a question via email by Sebi. And Sebi says that Sebi is an NRI, 44 years old, aggressive investor. Time horizon is 15 years, and he has around 50 lakhs in savings allocated for equity investments, and has started SIP since last 1 year. The funds he has in his portfolio are Access Small Cap, Canara Bank Small Cap, Access Growth Opportunity, Parag Parikh Flexi Cap, Parag Parikh Tax Saving ELSS Fund. So he wants you to review his strategy and his fund choices.
Yeah, so SEBI is on track to reaching a goal of 20 crores portfolio corpus if he continues for the next 15 years, and the portfolio grows at 12% a year because he's putting in a SIP amount of in excess of 4 lakhs a month. So as far as his portfolio is concerned, let me start off with the Parag Parikh tax saving ELSS. Just want to say that he needs to put in only that much amount that will help him cover his ATC section benefit, and the remaining, if he has some money left over there, he should put in HDFC FlexiCap Fund. Again, like most portfolios I've been seeing for the last now almost 8-9 months, very large allocation to small cap at 50%, and remaining allocation to ELSS as well as FlexiCap and large and mid. So obviously, I want him to increase his allocation to large cap, as well as make some changes to the scheme because there are some schemes which we are not too comfortable with. So Access Growth Opportunity would say that he shifts 50% of his SIP amount from there to ICICI Prudential Blue Chip Fund. Access Small Cap, again move 50% of that to the mid cap scheme of Mere Asset Mid Cap Fund. The mid cap category allocation is missing entirely. The Canara Robeco Small Cap Fund shift 83,500 out of the 1,04,000 to the large cap scheme of ICICI Prudential Blue Chip. So that's the change I would suggest for him to make in his portfolio.
All right, let's move on and let's take Mathan Kumar's question. He says that he's 42 years old and wants to build a corpus of 50 lakhs in 20 years. And he wants you to suggest some funds where he can begin his investment journey.
Yeah. So, Mathan, if you're watching, you require a total SIP amount of 5,000 to create a corpus of 50 lakhs in the next 20 years, if we are assuming a 12% per year return. So I'll tell you how to split this 5,000. You can put in 1,500 in ICICI Prudential Blue Chip Fund, 700 rupees in Bandhan Core Equity Fund, another 700 in Mere Asset Mid Cap Fund, 600 in HSBC Small Cap Fund, and 1,500 in HDFC Flexi Cap Fund. This will create a nice ready-made portfolio for you across different strategies and sizes in the market. And you should continue with this and make sure that you review your portfolio once every 6 months or a year with some advisor.
Let's move on to Sridhara's question. And Sridhara says that he's underwent cataract surgery under a cashless arrangement with Care Health Insurance Company at a hospital at Bangalore. And the insurance company's initial pre-approved limit of 48,000, but the final approval was only of 35,000. So according to the terms of insurance policy, there is no sub-limit for a cataract surgery. Now, is it acceptable to first approve a higher amount and then sanction a lesser amount? So a typical insurance case. Gautam, you'll be comfortable answering this?
Yeah, so it's a short answer.
Yeah.
Typically, what happens with such insurance is that you get a initial sanction amount, and then depending on the consumables, because that is something that is not covered typically by most of these policies. The consumables are not covered, so the cost of the procedure and the essential those costs are covered. But for example, the syringe used or the gloves used, those are consumables, those are not covered by insurance. And that's why the amount, while the sanction is initially 48,000, the insurance spend is about 35,000 only.
All right, I think with that, it's time up on the show today. Thank you so much, Gautam, for being on the show and helping our viewers. And for all the viewers, time to sign off as well. But then I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.